All right, Jsgray, NEXA Mortgage. Let's go ahead and talk about why I made the move to this platform, why I left the retail mortgage banking world, and why maybe you should make that move as well. Number one, comp is the big number one driver here. Of course, I'm getting paid 220 basis points, where you're probably at, you're getting paid on average about 100 basis points. That's number one. You're doubling your income and you're getting better rates than what you're getting into in the retail mortgage world right now. So that's the big piece of the puzzle for every one of us. Hands down. Number two, you get paid within 3 days after closing. You don't have to wait 2, 3, 4 weeks to get paid. You get paid within 3 days after closing. That's a big piece of the puzzle too. Number three, you have every type of loan program that you can think of in the entire world here. Now, I'm going to give you an example of what happened to me. I got a loan from a different lender. They declined the loan. I actually end up shopping it around. I had one lender decline it, a second lender decline it, and then a third lender actually took the file. I would never have been able to do that in the retail mortgage banking world because as soon as your loan gets declined, you're done. Now I have the ability to send that to a different bank and have someone actually end up doing that deal. So saving deals that other people can't do is one of the other pieces. Another piece of the puzzle is you actually get money on some downline. We'll deal with that later on a later video when we talk about the economics of that. Number four, you can get paid either 1099 or W-2 based on the state that you're in. Some states limit you just to W-2 earnings, so we'll have to see what your state regulator requires on that. Now, let's talk about the big piece of the puzzle too, about locking in a loan. So when I lock in a loan, I lock in a loan as soon as it comes in. In that retail mortgage banking world, I was playing this game all the time. I was sort of saying, oh, I think the market's going to get better tomorrow. The next day I'd wake up and we're down 17 basis points. And you're like, oh my gosh, why didn't I lock in that loan? Here is not the deal. As soon as that loan comes in, you lock it in with one of your favorite investors. And then if the market decides to improve, you try to relock with that investor, or you pick up the package and take it to the other lender. It's an easy 3.4 file, transfer it over, transfer the appraisal, and you can get that done if you need to. This will be really big in the refinance world when we get back to refinances as well, because it gives you more flexibility to deal with some stuff. On purchases, of course, we all have some timelines. So it's a little bit more difficult, but if you can get that done in the first couple of weeks, you can make it happen. So those are some quick little tidbits that I think is really explaining why I made the move, doubling my income, having some abilities for some downline income, and being able to lock in those loans and not having to stress out in the middle of the night. All right, talk to you soon. Bye-bye.